Good morning and welcome to the coffee shop, everybody. This is your host and barista, Eric, and I have something just like quick and off the cusp for you. You're going to like how this plays out. So, the other day, I was testing out some new strategy that I'm developing called a 3-step divergence trading strategy. And it's for you new traders who can't follow the technical aspect of trading divergences because there's a lot of things to learn. But I broke it down into 3 main things that you need to do. And I'm still testing that. I'm still back testing that strategy. So I looked back in the charts at a entry point at a trade that I took a couple of days ago. Okay, so it's a trade that I took around November 9th. Right now it is November 11th, and I want you to see what I was watching in the Algo and the bull bear to understand how it correlates to the new Mass Effect moving average and what you should be looking for. Now, what I have here is I have my VWAP channel set up. I don't have the width of the channel set properly. I just really want the VWAP channel up on my screen so I can see where it is in relation to price. Now, usually, if price is below the VWAP, you are looking for short positions. And a short position would be every single time that price rejects off of the 50. And you can see it reject right here. Okay, here you would have taken a short position and continued that down. But what I'm also looking for is divergences. Okay, this would be a bullish divergence. A bullish divergence is when price makes a new low, but your RSI makes a new high. Okay, and it looks like that. Okay, here this would be your RSI, and this would be your price. So let me get rid of these two and I'll show you what I found out. Now, you can see divergence is starting to form a little bit early because of these clouds that are in the two oscillators. Usually when you see both of them turning black, you have a loss of momentum in the direction of whatever the main trend was. So you can see that I am below my VWAP. My price is below my VWAP. My 50 period moving average is below my dynamic trend line. Okay, dynamic trend line. Remember, we just covered that yesterday in the Mass Effect moving average release. Like, this is the dynamic trend. Okay, you can see that's that one. So if you see the dynamic trend is downward and it's red, I always set mine to red. If you see that it's downward and that it's red, you are in a downtrend. So there's a few things here confirming you are in a downtrend. This slopes down. This slopes down. It's below your dynamic trend and you are below your VWAP. However, you see this black cloud start to form here and a black cloud start to form here, which means you are losing momentum to the downside. It is canceling out. So you have to get ready for a reversal. That's where I start looking for divergences to form. And then I was able to start figuring out, okay, here comes the setup. Let me try this 3-step divergence trading strategy. So here I see there's a low, price makes a low, and it makes a lower low. Well, that's fine because it corresponds with the RSI, which is here, right? The lows on the Heiken Ashi candles. Here's a low and a lower low. No problem there. But what I also see is next. I still see this low. Price makes another low, okay? However, the RSI makes a higher low. There is my divergence. Now, you see the angle of this divergence. It's very particular. It is minus 14 degrees. Let me swap it around because it's not supposed to be that way. I want to know the actual direction. Here we go. Now, this is 34 degrees. Now, anytime you have a 34 to 45 degree divergence, that is a strong move, and you just need to wait for the breakout. This 3-step RSI divergence strategy is very easy to follow, and all you are doing is you are waiting for a breakout to either side of the divergence, okay? So what you see here is this is the candle that got me into the divergence, this is the bottom of the divergence, right? So you really just need to do three things. One, you identify the divergence. We did that. We can see it. Then you draw a box around your divergence. For that, you need the top of the candle, the spread. I'm drawing a box around it. You start from the top of the spread on the first candle, and you go to the bottom of the divergence right there, okay? That's all you need to do. Now, what you have done is you have now drawn a zone that you need to break out of. You're either going to break out to the downside, or you're going to break out to the upside, depending on what the market sentiment is, okay? So you just prepare yourself. You wait for a breakout. What I'm noticing is that the candles are red. They are following volume color, right? And I am losing momentum and I am losing volume to the downside. It's being lost. I'm expecting a breakout to the upside. And as I play this forward a little bit, again, this is my zone. I need to break out of this zone, and I'm looking for a few things. Heiken Ashi has to close above plus 10, and you need a nice strong volume candle above the void. Okay, that's always your key. So as I play this forward, let's go forward with it right here. You can see all of a sudden the VWAP has come shooting down, smashing into the price, creating a range candle. And then the very next candle is green. That is a clear definition that volume is cascading and switching over to the upside. Volume is switching to the upside, but your momentum has not caught up yet. This is what I keep saying. You need volume to create momentum, and then your price action follows. So let's go a little bit further. Okay, you see you get a nice long candle, but it's got a big wick rejection off of the 50 period moving average. So this is not an entry yet. Also, you can see that volume has not broken above the green void. So while a lot of people enter when the RSI is crossing the midline, that is not a good entry. This is not a good place to be. You are still inside this range. You can see that your candles on your bull bear volume indicator, no volume, okay, no real volume. It is moving up, but it's inside the void. So let's keep going. Now, we have a clear break of the plus 10. We do not have a break of the void yet, okay? This is still not an entry. So you do not enter to the upside just because you broke your 50, all right? Keep going. I need a break of the void. I am clearly on the right side of my Heiken Ashi Algo. I'm still above my 50 period. Here we are. This candle is the close of this candle, or the open of the next one, is my entry. So let me just go forward one more. Now you see what happened there. The candle formed, it got pulled back down, and then it got pulled way back up. So there's a lot of volume taking place here. This is your entry right here. So at this point, you would have entered into a long trade, right? I'm doing it at the start of this candle, which means I need the RSI from the previous candle. You can do two things here. You can go for the RSI formula, right? Here, you want the last time that the RSI pulled backwards. You can see that here. If you're trading up, you want to find the last place the RSI pulled down, right there. Okay, so this would be my swing low. It's going to be right here. It's really, really tight. I'm not comfortable with it, but I'm going to use this swing low only to get the RSI formula, and then I will move my stop loss to the other end. Okay, and I'll show you what I'm doing. I figure it's easy if I do this way so you can see how I set this up. Now, I put my stop loss at this level, right? The low of this candle. Here you go. Now, there's my swing low. It's at the low end of that wick of that candle. RSI moved down there. Now, all I want to do is I want to use this to calculate the RSI formula. The previous candle was my good break. I have nice volume there. What is the RSI? It is 13.18. That is a 1 to 3.18, right? So 1 to 3.18. here, 1 to 3.18. I'm going to pull it back just a little bit to 1 to 3.10, let's say, right? You don't have to go all the way with it. Then I'm going to just drag this out. I don't know where it's going to end. I have no idea. We'll find out shortly, right? Now, the cool thing about this is, if you entered at the right place, you would have already caught this voluminous candle and the very beginning of the color change of your, look at that, your overall trend changes right there. So the algo and volume are telling you just before volume changes and just before market changes. Now, here comes the VWAP trying to come back up to the price, right? So let's do this again. I only set this swing low to give me the calculation for the RSI. But then, since I know this is my zone, I want to put my stop loss down here on the other side of the zone, just to be safe, okay? Now, let's let this play out and see where it ends, right? I said I was going to pull it back a little bit right there. Okay, now overall, this comes to about a 1 to 1 or a 1 to 1.1. So let's play it out and see where it goes. Right there. Stop loss hit, and the take profit is 6%. That happened on a 5-minute chart. That took 2 hours and 40 minutes on a 5-minute chart. So that is the step-by-step on how you do that. This is going to be the trading strategy that I'm developing for the 3-step process of trading divergences. It is very easy. You do 3 things. You simply, let's take this off, take this off, take this off. You identify your trend, okay? You identify your divergence. Then you draw a box around that area, the top of the spread to the bottom of the candle, okay? Then you wait. You have to be patient. You have to wait for price to start moving in the right direction, and you get your volume, right? You get your volume. You get a breakout of that zone, and you make sure that your Heiken Ashi candle is closing above the 10. It doesn't have to open below and close above. It just needs to be closing above, and that happens way over here. It's closing above. Okay, now, just out of curiosity, I want to see where price would have gone to next, okay? And let's set this here for, I don't know, plus 10 and play it out because I think price actually comes back down a little bit. Let's go. And look at that. I would have hit a second take profit, which would have been really good. I would have hit a second take profit right here. In another video, I will show you how to find that zone. And to be honest, all you have to do is look left here. Here's the last place price came down, went up real hard and came down. This would have been a good take profit area, right? Because price went up and came down hard. So the close on this area would have been here. Here's the close. I'll mark it with the Mass Effect itself. The high close right there, okay? Price came up, hit this level. I'm just going to mark that right there, and I'll look here. That would have been my second take profit, and if you look closely, price hits it right there, creates a new high, and moves, keeps moving, and finally looks like it does hit a third take profit. So this is a pretty good strategy. I like it. It works out really well. There must be another divergence taking place, and yes, there is. There is one right here. This would have been another entry. Here you have a low and a higher low, but here you have a low and a lower low. The RSI is pointing up. This would have been a secondary entry where price came down below the 50, came down below the 50 again, and you are looking for those black areas in the cloud here. It turns black here. This turns black here. It turns black here. So you're looking for those places where you've lost momentum and it's going to reverse the other way. It actually came down and it tested the VWAP a second time. on that divergence. And all you would have had to have done is, again, you see your candles are green, which means overall your volume's to the upside, right? So you would have done that little box trick again, right? Here and here. This is your low right there. So you set your box up, top of the spread, bottom of the candle. You get your breakout here. Do you have volume? No, you have volume here. Here's your volume. And your Heiken Ashi candle is not ready yet. You're waiting, you're waiting. Here you have volume, you have a break. This is your entry, and it makes a long wick rejection. Oh, sorry, your Heiken Ashi candle is not majority over the line. This is another entry right here, long wick, majority over the line right here. This is your entry candle. And you would have used your RSI formula again. This says 9.96 right here. So the close of this candle would have been there. You want the, there we go. You want the swing low, which is right here. Last place it went down. Right there, just for the calculation. 9.96, that is a 1 to 2.96, right? 1 to 2.96. And that would have gotten you this move, 1 to 2.96. There you go. See, it would have gotten you this big fat candle right here. And then price ranges and then falls off the cliff. So just wanted to let you see how that works. Hope that replay works for you. And I will be releasing the 3-step strategy either today or tomorrow. So thanks everybody for coming through. Peace out from the coffee shop.